So we get a lot of questions here on the YouTube channel and in our Facebook group asking about ISAs. Some of these questions are quite advanced, but some of them are also pretty basic. Now, to do all of them in a single video would be, well, it would take a long time. So I'm going to split them into a series of different videos, starting with this one, which is if you are brand new to ISAs or you're a little bit confused about the different sorts, because there are 4 main ISAs plus another one, plus a kind of different version of some of those main 4 as well. Then this one will hopefully make you have a better understanding of what they are and help you choose which one you might want to go for. Whether you should or not, that's for another video. So let's kick off with what is an ISA. Well, ISA stands for Individual Savings Account. And in the same way that a normal savings account, you can put money in it, you can earn interest, that happens with an ISA as well. But as we get on to, there are other options. You can also invest in an ISA. So though investing isn't technically saving, it's putting money away, hoping it will grow. You can put that in an ISA as well. And there are some other options we'll talk about. What makes an ISA different to a normal savings account or a general investment account is that any returns you get, whether that's interest on savings or gains on investments when you sell them or dividends that are paid, whatever that is, it is tax-free. You are not taxed on those gains on that interest that you earn. Now, as I've detailed in another video, there are other allowances which mean most people don't need to worry too much about interest on their savings because they can get a personal savings allowance of £1,000 or £500 tax-free. Anything above that, then they will start to pay tax on that at their rate, either 20 or 40%. I say most people don't need to worry about it. As we have had over the last 18 months or so, those increasing interest rates, it does mean that if you've got a rate of 5% and you have £20,000 in savings, then that money is going to be all you're going to earn. That's £1,000. That's your interest-free allowance used up. Anything above that, you'll be taxed. And if you're a high rate taxpayer, well, you only need £10,000 saved at 5% before you go over your £500 allowance. Obviously, if you're a high rate taxpayer, you don't get this at all. So from that point of view, an ISA could be really handy because you might obviously lose that allowance in your cash savings. When it comes to investing, I think actually most people should be starting their investing in a stocks and shares ISA, which we'll come back to in a moment, because the allowances there have been cut recently. They'll be cut again next year. This is the capital gains tax allowance and the dividend tax allowance. They will be cut. They will be reduced even more so. And as investing, you are talking about the long term. You're thinking about having money put aside for at least 5 years, if not longer and longer and longer. There's obviously a greater chance for growth, a greater chance for you to maybe go past those allowances, even when they were bigger than they are right now. But having that money from the start in an ISA means all that stuff is protected. It would all be tax-free year after year after year. So that's effectively what an ISA is. Now, there are, however, a few restrictions that are worth knowing about. The first one, and this is quite an important one, is that there is a cap every single financial year of how much you can put into an ISA. It's a pretty hefty cap. So again, most people aren't going to be worried about this, but if you do have a lot of money for whatever reason, retirement, inheritance, or just you've been saving your ass off, then that might come into play a little bit more. But this cap is £20,000 every single financial year. And that £20,000 collects all the different types of ISA. It's not per ISA type. It's all your ISAs every financial year, although it does reset at the start of the new financial year on April the 6th, runs for 12 months, resets, and so on like that. So that's the first caveat that's really important to know about. £20,000 cap that you can put in every single year. The other one is, as we'll go through, there are these different types of ISA. You can only pay into one of each type in a year. So there are, I'll tell you what they are now. We're going to see this in a minute. There's a cash ISA, a stocks and shares ISA, an innovative finance ISA, and a lifetime ISA. They're the 4 main ones. There is also the junior ISA we'll come back to. But those main 4 that we've got, you can only pay into one cash ISA in a year, one stocks and shares ISA in a year, and so on. You cannot pay in, to be clear, to 2 cash ISAs or 3 cash ISAs or whatever it is in that financial year. Now, you could have had them in your previous year and a new year comes along and open up a new one. So you could have 2 open cash ISAs. You have 3, 4, 5, loads of them, one each year. But you can only contribute new money to one of them in that year. Or you could just have one that you keep paying into every year. It doesn't matter. But obviously, if you want to get the best rate, you may want to be doing that. So that's really important. However, you can have a mix of those different types. So you can pay into a cash ISA and a stocks and shares ISA if you want, or a cash ISA and a lifetime ISA, or any combination of those 4 main ISAs, that is fine, okay? But again, that £20,000 cap does govern how much you can put in collectively in that financial year. There are many, many more things. I said there'll be more videos that I'll do which do look into detail about some of those other questions you've got, particularly around transfers. Lots of questions you can hear about how you transfer money between one ISA and a next, which, spoiler for those other videos, but the very sort of the headline there is when you want to withdraw money from an ISA to a new ISA to get a better rate, don't just take it out as you would with a normal savings account. You want to use something called a transfer. Whether that's cash ISA to cash ISA or cash ISA to stocks and shares ISA or however you want to do it, use this process called a transfer, which is an official process run by the new bank that you are opening the ISA with to get your money moved over. Don't ever withdraw it. But again, I'll go into more detail on that on another video very, very soon. So what are the different types of ISA? Let's go into detail, shall we? And the first one I mentioned, probably the one you're most familiar with, maybe you've already had in the past, if not right now, is a cash ISA. And a cash ISA, as I said at the top, this is most similar to a normal savings account you'd open with any bank. In fact, it is just a savings account with those caveats and those features that we mentioned of a maximum of £20,000 paid into it or a combination of ISAs in a year. And you can all the interest you earn is tax-free. Now, cash ISAs themselves, there are a variety of different cash ISAs. There's the easy access cash ISA, which means you can get your money in and out whenever you want. If you get one of these, you're likely to have a lower fee than you will with any of the other options. There's also very, very, very similar to this, something called the limited access cash ISA. And as the name suggests, it means you can take your money out, but you might be restricted to 1, 2, 3 times a year. Sometimes they go as high as 6 times a year. But it basically means if you want to take money out more than that, maybe your ISA will close or maybe your rate will drop down, whatever it might be. But in return for that limited access, you don't need to get hold of your money all the time. You might get a slightly higher rate than easy access, but it does vary by provider. And what I'll say actually, with any of the Best Buy cash ISAs, you want to find at the best rate, head to becleverwithyourcash.com/savings. That's where myself and the team every single day, we're updating our tables so you know what the highest paying accounts out there are. So that's the one you're going to be most familiar with, but there are some different sorts. There's the fixed rate ISA where you lock your money away for a period. It could be a year, it could be 18 months, 2 years, 3 years, whatever it might be going into the future. And with these ones, as the name suggests, they are fixed, they are locks, and that means you can't get your money because the rate will not change. It isn't variable. Where fixed rate ISAs are different to fixed rate accounts outside the ISA wrapper is you actually can get the money, but there will be a penalty, an interest penalty that you'll have to pay. Now, this, for the lower sort of the 1 year ones, maybe look at 60 to 90 days of interest penalty you'll pay. But the longer the fix, the larger that penalty will be. So a 3 year fix, maybe you're looking there at 160, 170, 180 days, whatever it might be. Again, every provider will do this differently. And this is an important one to consider here, because if you have fixed into an ISA at a rate, and let's say you did it 2 or 3 years ago when rates aren't as good as they are right now, it could be worth paying that penalty just to get your money back so you can put it into one with a higher rate now. Again, so it's something to investigate a little bit as well. The other types of cash ISAs that are worth looking at are regular savers and notice account ones. A regular one works in the same way as a normal regular saving account does outside of an ISA. You put a certain amount of money away every single month. They normally kind of access it after a year. There's not a huge number of those, but they do exist. Same with notice accounts, the notice account ISAs. With those ones, you can say, look, I want to get my money out in 3 months or 6 months time, whatever it might be, but you have to give that notice in order to get it. Now, with both of those ones, again, you might get a slightly increased interest rate, but like I say, there aren't as many of them around. But that fundamentally is your cash ISA. Next up is the stocks and shares ISA. And this one, as the name suggests, is around investing. So you would open up the stocks and shares ISA, and then you would, with whatever platform you choose, you'll then look for those kind of different types of investments that you want to make. And these ones probably will come with an additional charge. In fact, they almost definitely will come with an additional charge, both the platform fee and the kind of the fee that comes with the actual fund itself. So you've got to take that into account. Obviously, with any kind of investment, although I don't cover them here on this channel, it's really important to reiterate this. Although you hope to get larger gains over time, and they say the minimum for investment is really around 5 years, if not longer, there is obviously the risk that you might get less. Your money value might come down. So this is really about thinking for the future. It's not for stuff you want to do almost straight away. And as I said before, I think this should be almost certainly where you start your investing, in a stocks and shares ISA rather than a general investment account. It's less cut and dried with cash ISAs and cash savings accounts, simply because that difference you're going to get in the interest rates. But absolutely, I would start with one of those. The important thing to note here is, unlike the cash ISA, which you can open from 16 with some providers, a stocks and shares ISA is just 18 years up. The next one is another investment type ISA. This is the Innovative Finance ISA. Again, not a huge number of these ones out there. This effectively takes advantage of something called peer-to-peer lending. So you get your money, your savings, and you give them to a company which acts as a middleman who will give you an interest rate in return for your money. What they then do with your cash is they lend it out to businesses and individuals at an even higher interest rate. And if those people they've lent to then pay the money back to the middleman, then they get pay the money back to you. So there's an element of risk associated with that, obviously, because if they don't pay back their money, then you won't get your money back. In reality, your risk here is going to be greatly reduced because that money is spread out. It's not going to one individual. It'll be all your money and everyone else's money all pulled together with little bits here and there. So if someone does pull out, it won't be the full amount that you lose. It'll just be a small amount if they don't pay back the money. There have been problems with this over the last few years. So I generally wouldn't say go for them, but certainly if it's something you're interested in, you may as well investigate them. Now, the next major type of ISA, the last one that goes to adults, is the lifetime ISA. Now, this one has two purposes. This one can either be used to buy in your first home or for your retirement. Now, I'm not going to go into a huge amount of detail on lifetime ISAs in this video because I've got another chunky guide to it in another video, which will take you through everything you need to know. But I'll give you the basics and some important headlines you do need to know about this one. First of all, this one can be a cash ISA or it can be a stocks and shares ISA. You can have one or the other, it doesn't matter. And although I said there was a rule earlier on how you can't pay into more than one cash ISA in the same year or more than one stocks and shares ISA in the same year, that doesn't count with the lifetime ISAs. You can have a cash ISA and a cash lifetime ISA. You can have a stocks and shares ISA and a stocks and shares lifetime ISA. You can have one, multiply them up if you want, or you can mix and match it. You have a cash ISA and a stocks and shares lifetime ISA, however you want. But that's the only exception there where you can do that. So that's something you need to make a decision on. I think ultimately, if you're buying for your first home, cash is probably the best option because you don't want to risk losing some of your deposit. If you're saving for your retirement, the stocks and shares ISA is probably your best option because you're talking about a long way in the future. Now, this money isn't just going to earn you interest on the money you put in there if it's a cash one, or hopefully some gains and dividends if it's an investment one, because the government will also give you a 25% bonus on your deposits. Now, the bonus is paid on the new deposits you put in. It's not paid every single year. It's just when you put the money in, then you get that 25% deposit. There's also a cap of how much you can pay into a lifetime ISA of £4,000 every single year. And that £4,000 sits within that wider £20,000. If you do put 4K into a lifetime ISA in a financial year, that leaves you an allowance of £16,000 from those other types of ISAs if you have the money, of course, which again, lots of people won't, but it's worth knowing that it's not an additional one. It goes from within that main overarching allowance. A couple of other quick things here. You can open one from the age of 18, but only up to the age of 40. And you can only pay into it and get that bonus up until the age of 50. Again, so this is kind of slightly more restrictive than the other ISAs. Also, if you want to use it towards your first home, there is a cap on the property price of £450,000. So if your property is bigger than that, it costs more than that, then you won't be able to use a lifetime ISA. And if you don't use it for buying your first property, or you're choosing instead to use it for your retirement, you won't be able to access it until you are 60 years old. Now, there is a way to get your money out without those two, but you will pay a penalty. Not only will you lose that 25% bonus, you'll also lose around 6% of the money you put in. So really, you only want to use one of these if you're sure it's going to be for your first property or for retirement. Again, check out my other video, which goes into a lot more detail about how lifetime ISAs work. Now, there is one more ISA to talk about, and then one more type of ISA we'll come back to as well. So two things here. But this next one is a junior ISA. As the name suggests, this is for kids, anyone under the age of 18. Now, this has its own allowance of £9,000 every single year. So this is separate to that £20,000 allowance. And also, this doesn't fit in with that thing about only not paying to more than one of the same type as well. So if you have your own cash ISA and you have a cash junior ISA for your children, that is absolutely fine. They are separate. Have them as two separate pots almost. Those four types of ISAs, £20,000 limit, and only one of each type. And then over here, we've got the junior ISA. Again, you can do what you want with that one, up to £9,000 in a year. Now I say when the child gets to 18, they will be able to access the cash and do what they want with it because it rolls over into a normal adult, if it's a cash ISA, if it's a stocks and shares junior ISA, into a stocks and shares ISA. And that will be the first time anyone can access their money. So it's worth bearing that in mind as well. If you put money into it, you can't take it out until the kid turns 18, and then it's theirs to do with as they wish. Now, I said there is one last type of ISA that I want to share with you, which is a little bit different because it isn't in addition to the cash, the stocks and shares, the innovative finance, the LISA, or the junior. It's a version of each of those apart from the lifetime ISA. And it's called a flexible ISA. Now, as the name suggests, this gives you greater flexibility with your money. And what that flexibility really kind of relates to is that overall allowance, how much you can put in a financial year. And it means you can actually take money out and put it back in without going over the allowance. So give you an example, probably makes it easier to understand. Let's say you add £10,000 to an ISA this year, right? £10,000 new money goes into your ISA. You want to take out, because something comes along, you need to spend 5K. You take £5,000 out of this ISA. Now, if this was not a flexible ISA, your allowance for the year of £20,000, well, you put 10 in this year, which means you've got 10K left to put in if you have that cash, right? If it was a flexible ISA, well, you can put in not just that extra 10 from that initial 10, so 20 in total, but that 5,000 you took out, you can put back in. So potentially you can still have 20K in that ISA by the end of the year. Okay, appreciate this isn't going to be for a lot of you because not everyone's going to have that amount of money to be playing around with, but it's a really useful one to sort of consider if the ISA you see is flexible. Not all of them are going to be flexible, so you have to check and see if the provider offers that on their ISA. And again, it can be a cash ISA that can be flexible, stocks and shares ISA that can be flexible, innovative finance ISA that can be flexible. What's also interesting with this one, and it does depend on the provider here, so you have to again check this details, but some of the providers will let that flexibility count to previous year's allowances. So here's an example for that one. Let's say you've got £50,000 in your ISAs. 45K of that is accumulated over various years. 5K has been added this year. And let's say you take out the full lot, the full 50K. All comes out, something big purchase coming along. You're using all that 50K. Done. Out of there. Now, a non-flexible ISA, because you've already paid 5K in this year, would only let you put 15K into an ISA later in the financial year. But a flexible one that allows you to do this from previous years would let you put that full 50K back in, plus another 15, which you hadn't contributed already from this year. So it's something that's definitely worth considering when you're choosing your ISA. But again, not going to be essential for most of you, but certainly those who want to access their cash and have large sums, it's a really, really interesting feature. As I said, it's the first in a series of videos about ISAs, so hit that subscription button so you don't miss out on those extra ones answering all your questions. My name is Andy Webb. Thank you so much for watching. Check out these videos here for more ways to boost your savings.